how to use life insurance to retire tax-free. So let's talk about that. You know, the difference between life insurance and tax-free in retirement, which I hate that word, I call it Freedom Day, versus your 401k that at the end, when you actually start pulling it, you get taxed whatever the tax rate is. Much riskier position to be in. So let's just put those two on the table as a position of choice and to really start looking at this. So the three things I want to talk about around the life insurance and retiring tax-free. Number one, how do you actually use properly structured life insurance as that vehicle to retire at Freedom Day? It's a huge, like I'd say recession-proof asset as well. But number two, why does the tax-free growth matter so much in this model? And again, do some comparison against that 401k. And I'm not saying don't do the 401k, but too many of you have just the one asset. You're not using life insurance as another asset. And then last, the exact shift that wealthy people do. I know people literally, millionaires, multimillionaires that use life insurance as their core vehicle, hence the Rockefellers and the Rockefeller structure. So let's dig in first. First, let's talk about structuring it properly. So I'm going to read off a few points to make sure. The right type of insurance, it's not term. Although that's all over the internet and you can qualify for $15 a month and no exams and blah, blah, blah. Most of you are going to burn that cash, outlive the policy, and it doesn't work. So you need either whole life or an IUL. You have to make sure that it's overfunded. I have been overfunding my life insurance as a legacy move for my kids. Sometimes our joke is I'm worth more dead than alive sometimes for my kids. But that's where the magic happens, is in the overfunding, because you can actually pull some cash value during your lifetime, not affecting your death benefit, which is critical. And you want to work with a strategist. So I have a partner. We have a company called Insurity. And if you go to the playlist, you're going to see Jason and I and all of our conversations about insurance and why it is so vital that you start right away. My son and daughter-in-law are actually looking at policies as we speak. They just got married a few months ago. Now they need this, they need the trust, they need all of the things we talk about because they're in now a married relationship. As well, they've had entities. My son has had entities since he was 18 years old, effectively now using it as a mid-20-year-old man. The second thing, you want to tap into the tax-free income. So how do you go get tax-free income? So you actually borrow against the cash value. So I have mine stacked, and we've reverse engineered it with my strategist, who I set all this up way before, and then just knowing the value of it, partnered with Jason to do Insurity. But to mine, we reverse engineered a potential of, what is it, 20,000 a month, 30,000 a month, 40,000 a month, 50,000 a month. What's that later? You know, I'm going to keep doing this probably till the day I die. So it's not like I'm going to be done and ending. But let's just say I wanted 20 or 30,000 a month as I, get to a certain age. So we reversed engineered how much I need to overfund so I can pull that. And then I live on that tax-free. So yes, you put the money into a policy and then you can take monthly distributions of however much you need. Some people actually take those and then actually create loans and go buy real estate with them. So there's a lot of functionality that you get to do with life insurance that most people, don't know about, and the term policies can't do it because they don't even qualify to do it. The other thing I want to talk about as far as the tax-free, comparing it against that 401k, when you are required at 70 to take minimum distributions, you're going to pay tax on that distribution at the rate of the tax, whatever it is in the country at that moment. It's a risky proposition, especially with the economy being as volatile as it is. How much is that tax going to be when you are ready to pull? And if you pull on a 401k, you can only really loan about $50,000 to do like what you want to do. So it's more restricted. The life insurance, when you overfund it, you can take an enormous amount of that. And again, a strategist will tell you how much more of that money, when you overfund, you can pull back out as a loan. And yes, you have to pay a small amount of interest. But when you calculate that against what you're going to use to invest it in, the arbitrage, the gap between what you're having to pay and what you're making, again, numbers don't lie, so do the math. Now, before I go on to my last point, and really encourage you to look at the playlist with Jason and I and go through, get an appointment. So there will be an appointment schedule. His scheduling link is in the link below. So get on his calendar, see if you qualify, which you most of you will, get started sooner than later. And if you're in a job where you've quit a job, and you are going into this COBRA period, which is really health insurance, but there's also this period of transferring your current life insurance from the job you had to where you want to take it, make sure you call a strategist. Don't let that linger for a long time and just hang out there. So while you're here, I want you to subscribe to my channel, click that notification button. I need you here 5 days a week. We're a family-friendly channel, and we're here just for you and your family to get financial literacy in your home. I also have a game discount in the link below, so grab the game. The fastest way to put financial literacy in your household is to be here on my YouTube channel, subscribe and get notified 5 days a week. Every Friday I do a podcast, so my podcast link is there, and then you get my game. So 5 days a week you're listening to my YouTube channel, 1 day a week you're listening to my podcast, and then every day, a couple times a week, you're at least engaged in the game, engaged in the learning of the game. Plus, you got to add my 6 bestsellers to it all. So many of the IULs are actually indexed against the market. So most of you, unless it's a really odd year, almost every one of my years have gained and grown. Your gains can be locked in and you can do guarantees on the policy. So if the market does move and really drops, you're still at a high performance and still like really winning towards the life insurance strategy that you put in play. And I would say make sure you're always checking in with your strategist at least once a year, if not twice a year, to make sure that your policies are intact. They're doing what you actually signed up for them to do. And if you have any questions at any point, go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow.